Welcome to MegaTrade 101 video presentation and market view analysis on the foreign exchange market. Last Friday's report on the non-farm payrolls, which is 9.2% for unemployment that came out, the US dollar index retrieved lower, although it was not low enough and still close above its opening price of 74.96 level. As you could see, that it is still a blue candlestick bar where the high was at 75.41 and closing at 75.08. Excuse me. However, the opening price was substantially higher as far as basis points is concerned at 75.36. That's slightly over 30 basis points, or rather 0.30 basis points from its closing price, and currently working above this green resistance and trend line, which it has penetrated, and working at 75.80 level currently, which is nearing the next resistance price level, which is the price level of 75.98. However, we do foresee that this would still be penetrated, moving higher, which is slightly increasing its momentum and volumes towards the middle of the week. Now, with that said, looking at it more on a slightly bigger picture, the trend line here, as we click and becomes red, as you see that the dollar index had penetrated it and being able to work on these levels slightly above the trend line already indicates that it has some legs to be able to move higher. If you notice these three configurations here of candlestick bars, which we call a piercing formation, we used to call it spike formation, but as a piercing formation with the most modern technology and terms that's being used nowadays, it has more of a room to move higher with higher bottoms or lows significantly. That would build up momentum and would indicate a bullish tone for the US dollar. Now, with that said, we'll be moving on towards the euro as well as the euro pound cross rates reaction to this movement. Here we have three consecutive chart formations on a weekly basis, starting off with the euro dollar cable as well as the euro pound cross rates, where significantly we could see that the configuration, an inverse relationship with the US dollars index rather, you would see that the three piercing formation here, 1, 2, and the third one is very significant. Based on our market view report dated the week for July 4th to the 8th, we have maintained our position looking at the euro and calling it with a price and trend reversal as early as the third week of June, and at this point in time closing at 1.4180 level would have been a significant indicator that a continuation for the euro to head lower is substantial. Now, with that said, On a daily basis and comparison here, if we switch it, there you go. The candlestick formation here formed as a hammer have indicated that the bearish tone is already being signaled, with a tail at 1.4494, with a high at 145.67, and closing at 145.40, which is basically a hammer, prompting us to short the day after and speculating on the way down, shorting on the way down at the levels of 1.44 level. Have also shown the same indication here on a daily basis with the euro pound, that the same configuration of candlestick here with a low of 0.90 even, 03 rather, high of 0.9059 and closing at 0.9038 have indeed signified, and we also took that short position the day after it did. However, the more important criteria of risk tolerance here, that even if prices did go higher, the next possible high was only 0.9081, which is quite tolerable. So significantly, prices continued to move lower, although this made an indication where the euro made a slight recovery, as well as the loss on the US dollar index was not as convincing as others may have seen. But however, the next target level for the euro, while it's working at 0.8817, would be at the price level where its channel is located at 0.8755, 87, 56, 55 level. If you look at it on a weekly basis, it would be more identifiable, which, let's see if we can get this one. There you go. Where the moving 21-day, or rather 21-week moving average is at 0.8785. So that would be the play and the range where 0.8755, 50, 55 level, and 87.85 would be the next best support level that we're looking at. Although we may be able to play it in such a way that placing a trail order on the way up to liquidate short positions on both euro and the cross rate would be the strategy to be playing. So as to prove the authenticity of the trades that we made, however, here you could see that we still are maintaining the dollar Swissy, which is at 0.8390. Not too bad for keeping it at the most minimum level of risk tolerance, comparing it with the gains on the euro pound and the euro dollar, which would totally offset whatever losses, floating losses on the Swissy. But however, we'll be playing it to maximize, not because of greed, but simply because of maximizing the downtrend established already by the euro as well as the euro pound. That we do have to be able to maintain a medium term to long term outlook for this scenario. Now, with that said, like again, it looks like the continuation of the pound to be steadier with a wider range, and for the euro to be able to continue its down movement is still in the making as of now.